And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is put ourselves in the best success. A trade routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast, Tuesday, April the 12th. I'm John Hoagland. Thanks for trusting me with your time. As always, we're going to be focusing on context, risk management, and staying patient. If you're already in the markets, hopefully things are going your way. We've got things further complicated by the CPI numbers today. We're going to take a look at those very shortly. Should complicate things a little bit for our Make Hoag money today, just after the market forecast. Here's the link to join in. And so we've been waiting for this, since probably Sunday night. The CPI numbers are out. Core, month over month, they were looking for 0.5%, came out lower at 0.3%. Core, year over year, they were looking for 6.6%, came out 6.5%. The CPI, year over year, they were looking for 8.4%, came out a little bit higher at 8.5%. So far, our equities markets are liking it, taking us from a steady opening to a higher opening. Before the opening here, the stock indices were steady prior to the CPI numbers. Looking for those to be the highest in 40 years. Now, a little bit of conflicting information there that's always there to help complicate things for us. China is mulling stimulus as Shanghai remains locked down to the point of hunger. People aren't even allowed to leave their homes. Crude prices rebound on anticipation of OPEC's supply and demand forecast today, and we also await the API and EIA numbers this afternoon and tomorrow, respectively. No sign of peace in Ukraine after Austria's chancellor met with Putin yesterday. Please keep everybody really in your prayers. As always, make sure you hit the lucky like button. Share, comment, question, feedback, and heckling and love are always welcome here at the Market Forecast. Make sure you subscribe to our YouTube channel so you can get notified when we do go live. Speaking of which, tomorrow at 3 o'clock, you're going to get the opportunity to ask questions of our founder, Michael Patak. Always excited to see that. That's going to be a fun and hopefully informative event for us. That's tomorrow at 3 o'clock, so no forecast tomorrow. We'll have the forecast today. And again, right after the forecast, we are going to have Make Hoag money. So you guys are going to make the decisions to make me money. We're doing it in Sim. If we succeed in this combine, we're going live, and that's going to be a lot of fun. I'm looking forward to that. VIX this morning down sharply after the CPI numbers, down at 24.02, still above that 24 number. Dollar index, new 52-week highs again, up over 100 at 100.18, I should say. And the yield on the 10-year down after the numbers came out this morning, 2.71%. Markets on the move. Markets certainly going to be offering opportunities today. We're going to see if we can figure out what kind of context we're looking at here. We did have late spikes to the downside in our equities yesterday. We are going to be opening well above those late spikes. Is that going to bring us higher? Only time will tell. Got to say good morning to everybody. Dan Trader, good morning. Chilling with Dylan. Dan Trader, you win the prize this morning. You're the first one in the room. Chilling with Dylan, good morning. Tachyon, my brother Rick, love you. Manuel Caesar, Terry King. Tachyon, 2,000 in profit in the European session. New strategy works great so far. Send it to me, will you? Send it to all of us. What's my question is, Tachyon, if things turn south throughout the day today, what percentage of that overnight profit, that 2K that you put up last night, are you going to maintain and keep? If you lose maybe half of it, do you walk away for the rest of the day? You don't want to take a $2,000 profit and turn it into a losing day. I know. I've done it. I'm sure we've all done it, but think about a percentage of that profit that you want to make sure you guarantee you walk away from the full trading day today a plus player. Brian, good morning. Theo, Thomas, Brody, good morning. Denise, Scott saw, and he conquered. Carol, good morning. David, CPI MOM, better than expected. Dan Trader, Luis, good morning. Zachary, good morning. Giacomo, good morning. Bill Phillips, Alfred, Liam, Devant, Ricardo, Nico, good morning. Jay, good morning. Marcelo, good, my man. Vince, good morning. Jeff, Shaw, good morning. You're not late. You're just in time. James, Charles, Robert, Sarah Hall, good morning to you. Peace and love to you as well. Frederico, Laura McLaren, good morning. Huge amount of open interest yesterday, 70-plus point drop, which is bearish, right? Market might be, but market is rallying. Oh boy. Well, we got new information this morning, Devant. We got new information, so that everything can change in a heartbeat. As we say, our acronym here, I'm going to get a badge that says ACH, anything can happen. And another badge that says CYA, cover your ass. Level 2, good morning. It's good to see you, sir. Simon, Glitter Sandwich, good morning. Snowing in Colorado. Well, we got a little chill here in the Midwest, but it's sunny and no precipitation. Tachyon, done for the day. See, there you go. Nice work. Kevin, trading research. Andre Tachyon. Tachyon's going to trade my money. Well, you get that chance today in Make Hogue Money. I know you've been there, Tachyon. We're looking forward to seeing you back and looking forward to seeing your ideas and your thoughts. Hogue, is that CPI number really better for the economy? Only time will tell. That's okay. I know you're not yelling at me, level 2. No, you're not yelling at me. It's good. You got to digest. Up 2K, keep 1K, risk 1K. Absolutely, Rick. And Rusty Golfer. You're speaking to my soul there. I am a Rusty Golfer as well. Rob T., good morning. Okay, without too much further ado here, we're going to get into the charts. I want to try and be done here by about 8:15, 8:20 so we can get into Make Hogue Money and have time to discuss what we're going to do on the open and the S&Ps. Good morning, Rain. Good morning. Good to see you. That's a new name I don't think I've seen before. It's good to see you. Welcome to the Market Forecast. If you're your first one here, your first trip here, if you have never said hello, say hello. We like to know that you're here. All right. So without further ado, let's get set up here. We're going to start with the E-mini S&Ps. We'll see if we can catch the open in crude oil. If not, we can always go back and take a look. We've got the crude oil with serious overnight longs in the market. So we're going to take a look at that. All right, let's jump in. All right, so the S&Ps. Volume and open interest increased on this move to the downside yesterday, yesterday. I think that's what one of our comments was. Boy, we added a lot of open interest to the downside yesterday, but now we're headed in the other direction. Well, again, we've got new news. 44.10 is weekly kickoff low. We settled at 44.09 in the S&Ps. There was no true acceptance down below that level, and we knew that we had information coming out today. All right. That said, that 44.10 was going to be pivotal. We're well above it. We have a late spike. We have also got kind of a head and shoulders, shoulder, head, shoulder. I was looking at this last week's low as a potential neckline. It's quite possible that we've moved that neckline lower now. So we're heading in the opposite direction from what we thought we might see in open interest yesterday. And that's typical of new information, new news. Take a look at the 30. So, yesterday we had the late spike to the downside. I was calling the base of the late spike at about 44.21, just about here. Basically, the low of value from yesterday. The new information has changed things. Things are different now. The market has found a new impetus to push to the upside, and that is exactly what it seems to be doing. The market has moved all the way through yesterday's value area, testing the high from the range from yesterday. We've got possibly some overnight inventory to the long side. There is an unfilled gap from Friday to Monday. There's a naked point of control, which is a visual that if traders are focused on that, they will bring price there. It's, well, like I said, this is going to further complicate things. The one thing we can count on that we know for sure is that we are leaving the base of the late spike. We're leaving the base, the late spike behind us. And that's indicative of rejection of lower pricing, which would make sense because we're at 44.10 weekly kickoff low. We did not truly accept below it yesterday. We looked below it. We've come back above it even before the CPI numbers come out. And we've got this push to the upside. So the one nuance that stands out the most to me is the fact that we are rejecting the late spike from yesterday. Plain and simple. Not so simple. Where do we get in? Is the market going to leave the opening range at one extreme or the other? It's a distinct possibility. If the opening range is too big, I'm probably going to not take it and look for opportunities as the day goes on. But this is a pretty good drive. There's some pretty good volume here even before the open. This complicates things. If we were to open lower, below the late spike, below the weekly kickoff low, I would be looking for opportunities to sell strength. Do I look for opportunities to sell strength now? Debatable. Maybe not a bad idea because our downside structure remains in longer time frame. We've got a long way to go before we're going to break this upside structure, or downside structure, I should say. All right. Nuance, leaving the late spike behind, potential visuals above. It's going to be an interesting trading day. I think it's going to be a challenging one. If we can figure out what to do, we're going to be in pretty good shape. Now, to take a look at the crude oil. Open interest slowed yesterday. We lost 13,000. Volume wasn't bad on our test of the weekly kickoff low that did end up being rejected. Settlement was 94.29. Weekly kickoff low $94. So I'm looking at that as a failure of a potential continuation below that weekly kickoff low. Inside extended trading hour range, we've got 3 days really inside this range, which was last Thursday, Friday, Monday, Tuesday. Last Thursday's range seems to be holding at highs and at lows to some degree. So I think we're falling into a little bit of range-bound activity. I think we're going to be looking at short time frame control inside of these levels. And we got a big, long overnight inventory here, but we really haven't changed all that much for the last 3 sessions. We're still in that range. Take a look at the 30-minute and look at how long this overnight inventory is. This is a good example. Settlement was down here, okay? The market opened right here on this bar. Almost all of our activity last night has been pushing price to the upside. Okay, well, we're going to be opening with a gap. We're going to be holding very long overnight inventory. If we don't see continuation or at least consolidation up in this area, this market might give us an opportunity to look for a long at lower pricing. And again, if we get that inventory and can't close the gap, that can be a good sign that there may be an inherent strength to this market. Here's our move to $94. Oh, hang on. It's not quite on it there. Okay, here's our move to $94 yesterday and a consolidation above that level in the regular trading hours. So I'm suggesting that this excursion down below there prior to yesterday's regular trading hour session is a failure to accept below that level. Did we find some buyers down at that level? It certainly appears so. We peaked down below it a couple of times in the session yesterday with no success in finding sellers down there or even having buyers back off. So we've found that 94 weekly kickoff level is to be important support, at least for now. We're miles and miles away from it. And we've got all these overnight longs. We're watching the opening range, which we're in it right now. We're going to take a look and see how this opening range plays out. Remember, we've got all this information, all this money, overnight traders pushing. This is a 1 minute chart. It gives me heart palpitations to even look at it, but I'm just trying to remind us that this is the area where we've got overnight longs. And are we going to be looking to take an opening range trade? We've got 74, 25, 26, 32 points, 32 ticks inside the opening range. We've yet to leave the opening range, so I'm going to sit and I'm going to wait. If we take out the high of the opening range, I may not take that trade unless we get about halfway back into it to help limit my risk. Looking to take out the low of the opening range again, we may have the opportunity to come back inside the opening range to limit risk in order to take that trade. What are we doing here? We are inside the opening range for 1 minute. Let's see here. Not taking it out. We could sit in this opening range for a week because we're looking at it. All right, we're gonna move on and to check out the other products here. We'll come back and take a look at how we may have been able to succeed using the opening range today in crude oil. Remember, we've got all those overnight longs. All those overnight longs are looking for this market to find legs to the upside, and early. If they don't, they may start to get out of some of those overnight longs, particularly the ones that are late to the party, the longs up here, the longs up here, the longs up here. If there's going to be a fire set to the downside, it's going to be the ones that are down money that are going to be the ones that are going to pull that trigger. And as we start to get closer to points where other longs might have entered the marketplace, they're going to start getting nervous as well. We got to take out that low of the opening range in order for this to happen, and we have not done that yet. We're still in the opening range. All right, let's take a look at the Nasdaq now. Same but different. Nasdaq slowed as far as open interest is concerned. We only added 800. Volume certainly slowed yesterday on this push to the downside. Our overnight is basically back to our neckline here in the Nasdaq. So a little bit of a different situation. Downside structure and momentum are still intact here. Continuation and acceptance below weekly kickoff low. Look at what settlement 14,000, a big fat round number. Well, we're back above it now. So we are going to be looking at as somewhat pivotal today. Take a look at the 30-minute chart. So doesn't it figure? No overnight inventory. The numbers come out. It takes us right back to weekly kickoff. Doesn't that figure? 264 is weekly kickoff low. Market taking us right to it. We got a naked point of control. We've got a gap here. We're already in the gap here. Our weekly kickoff level in the gap. This is going to be a confusing day. The most important nuance, again, the rejection of our late spike from yesterday. Does that mean it can't go back down there and take it out? No, it doesn't. It just reduces the probabilities. We've got now we've got a whole bunch of new longs here. The base of the late spike, if you were wondering, I'm putting at 14,032. Settlement again, right at that big fat round number, 14,000. Very important pivotal level we are at right now. You're going to be watching to see if this opening range provides an opportunity away from the weekly kickoff level, which again, that level is 14,965. Gold. Got a nice push in gold as well. All right. So an attempted move to the upside, which was thwarted yesterday on higher volume, we added 1,600 in open interest. The move above this trend line is still on. We're one time framing third day in a row now. Okay, thank you, Fred. See, the crude has now taken out the low of the opening range. Let's give it a quick look. Okay, so we've taken out the low of the opening range. The market has come back into the opening range. If I want to try this short, it's giving me an opportunity to limit risk back inside the opening range. The halfway mark of the opening range might be an interesting spot because that takes us from 35 ticks of risk down to 25 ticks of risk approximately. So 19 down to about 20 ticks of risk if we get there. Look like that didn't make it that time. All right, we'll go back and recheck. Thank you for letting me know about that, Fred. Back to gold. 1,600 increase, volume increase, up against an important inflection level that didn't accept yesterday. Certainly looking like it might accept today. Settlement price was 1948. Our weekly kickoff high, 1958. We've seemed to have left that behind with this new information. Why are the equities and gold heading in the same direction? So this morning we were looking at no overnight inventory sitting right here at 58, kind of spanning it, attracted to it, magnetized to it. We've moved away from it. We've opened in value. We may have found our best trade location already today. If we continue to push higher, if we find acceptance above yesterday's high, if we find acceptance above weekly kickoff high, there's no reason technically with this daily. Okay, we broke out Thursday, Friday. Yesterday we continued. Today we can continue to push this market higher. It is set up for it. Problem is, where the hell do we get in? Where the heck do we get in? I really feel like I'm buying it high if I do it here, but that might be exactly what we might be thinking is the right thing to do. I'm going to try and stay patient. I'm going to look for some sort of structure before I find anything useful for me to get into this market. What's the most important nuance? Well, the rejection of weekly kickoff low, high, and value from yesterday after the number came out. We get a nice pullback, maybe value high is an interesting level. We're kind of teetering on longer time frame information, longer time frame levels, which would put weekly kickoff level as a much more important level for us to be focusing on for an opportunity today. Euro. Equities and gold probably up on lower rates. Thank you, Rick. Big brother's always the smart one. All right, the euro added 4,200 yesterday on an overlapping to higher range, but a down move. How does that work? Well, that's a weekend gap if you've ever seen one. Volume increased, range bound for a couple of days now. 1, 2, 3 days. 1, 2, 3, 4. Let's go with 3 days. It's 2 days range bound. The lower extreme of that range is the last week's low. 10863, 1.0863. The high of that range, I'm putting at 10965. Inside of that, we're looking at short time frame control. My focus is going to be on those extremes for bigger trades. Anything in the middle is a smaller trade. I'm going to be looking at 2 to 1, 3 to 1 reward over risk tops, and we're going to be looking at shorter time frame levels with width to do that. We've fallen into range. Here's that weekend gap. Here's Monday opening, kind of overlapping to higher, open interest increasing. We've got a lot of overnight inventory to the short side. It doesn't surprise me that this market has returned back to range after the CPI numbers came out. This helps us a little bit. If we're going to be looking for short time frame levels, you got yesterday's high to lean against. You got value low. You got yesterday's low to lean against. You've got overnight low. There's lots of things to lean against that can give us opportunity to limit risk, but we may end up dying by 1,000 cuts. Try and stay patient. The market has taken us back to range and value from yesterday. See what appears throughout the day today. The 10-year, rates dove to the downside. Isn't that correct? Yeah, we've got the 10-year 2.71. It was up 2.76 yesterday. Rates come up. Rates go down, price comes up. We've been looking for a pullback in this market, and we may be getting that pullback in this market today. We did add 14,000 in open interest to the downside yesterday on lower volume. Volume has been getting cut off for a few days here. That's an indication that an auction to one direction is tiring. The 14,000 increase in open interest yesterday is kind of a drop in the bucket when it comes to the 10-year. It's a very thick market. So now we're getting perhaps our chance to see a vicious pullback, because we've come a long way in a short time, and there's beer in Texarkana and they're thirsty in Atlanta. Here's the 30. Pow. Overnight inventory, none. Number comes out, pow. We're looking at longer time frame levels. We've taken out this little itty bitty gap here from last week. We've got naked point of control above. We've got more information up there. This is going to be a tough trade. I don't want to jump in front of it, but I don't believe that it's going to last forever, this upside move. I think this is just an upside rip to adjust inventory, because we all know rates are going to be going higher. Look for an opportunity to sell strength if you're a longer-term trader in this. Oops, hang on. We got some continuation in the nat gas here. Here's the daily. We've come a long way in a short period of time. Volume is slowing to the upside, but still looks relatively decent, not terrible. We added 14,000 in open interest on the upside yesterday on this continuation / breakout above our weekly kickoff high. Our next weekly kickoff high puts us up at $7.36, which is a swing high all the way back from November of 08. November of 08, done 14 years ago. That seems to be really the only thing that I can focus on in that continuation chart is that level. If that's where our eyes are, that's where we're going to go. Overnight, let's take a look. Let's look at the 30 real quick. So overnight inventory, we had a little bit to the long side. We have now reconciled that. No gap here. If we did open with a gap, we've closed it already. It looked like our opening range is the high of the session here so far in the nat gas and probably in the crude oil as well. It's just taking us back to yesterday's range, value high. Looks like an interesting area for an execution early in the session. Try and stay patient. The market opened out of balance, is moving back into range and balance. I'm going to be looking for, again, opportunities to buy weakness in this market. Our weekly kickoff high, $6.46, is impossible. It is in play today for us if we get the opportunity to see it. Second. All right, so yeah, you don't need a microphone. Make lacy treats. No, you don't need a microphone. You can just type in your ideas. We're gonna pick a few people and let them speak, but I want everybody involved in these decisions. So even if you just vote for a trade we're looking at, that is the contribution we are looking at. Remember, there's no good trades, there's no bad trades, there's just trades. No judgment on any thoughts or ideas on any of these trades. Bet the opening range trade will be the high of the day, but I know nothing. I'm going to take a quick look at it right here, and no, the opening range is not the high of the session. We looked down below it, and we've now continued above it. So our overnight longs are liking what they're seeing here so far in crude oil. Keith, good morning. James. Spencer, I know nothing, like Sergeant Schultz. That's funny. All right. Remember Jim Dalton saying, what doesn't happen can be as important as what does happen. If overnight inventory isn't corrected, wouldn't the low of the regular trading hour session mean a possible entry? Of course. Of course. Yeah, and you're absolutely right. What doesn't happen is as important as what does. John, I have a doubt. What really means the number of next to the TPO's number tag at the top of the TPO chart for the session? That's the number of TPOs. It doesn't really mean that much. It doesn't really. It just tells you how many individual TPOs there are in that profile. More TPOs, probably a little bit more active. But I don't use it for anything, Juan. I don't use it for anything. All right. All right, we're going to move on here because we got Make Hogue Money. I got to get things set up. We've got about 3 minutes till 8:20, and I want to be in there and ready by 8:20. So let's take a deep breath. Hopefully you're going to join me today. Here's the link again in case you missed it and you want to, and you want to join us. Take your deep breath. Stay humble, grateful, and creative today. Let's go make me money. And opening range, 1 minute. There are different opinions on that. Some say 30 seconds. Some say 5 minutes. Some even look at the initial balance as an opening range. We can go why I think the opening range is plenty in 1 minute, perhaps tomorrow. Looking forward to seeing everybody. Trade well today. Be kind to yourself, be kind to others. Continue praying for peace. I'll see you in about 1 minute in Make Hogue Money. If I don't see you, doesn't matter. It's okay. I'll see you for the recap. We'll see how this day traded out. Looking forward to seeing everybody anytime. Trade well today.